So Matthew's here with the business today. Investors, they've been looking to safeguard their funds, haven't they, Matthew?
Yes, they have. We're going to take a look at the bond markets because they can be quite a blunt but a fairly reliable measure of how investors feel about the global economy. And what we've seen in the last few days is very instructive. Spain yesterday, we saw bond yields going up to 6.7%. That's getting close to that very high 7% level, which worries people. We saw the same thing in Italy yesterday as well. They had a big bond sale going on. They didn't quite get all the bonds away and they were also paying a higher rate. But what's interesting here is we're seeing those going up. So what are investors doing? Well, they're looking to find safe havens for their money. So we're seeing rates in other countries going down, notably the US, Germany, the UK as well, and Japan, all falling to record lows. And that US rate, for example, that's the lowest since 1946. The rate in the UK is the lowest since records began, and those records began in 1703.
I was about to say, have the markets been spooked? They've been spooked to a week. Have they been even more spooked?
Well, they've been spooked. You'd be surprised if it was otherwise, really. We can take a look at how Asia's trading, because that's those markets, of course, open, and they've all been on the slide overnight, picking up on where Wall Street left off yesterday. We've also just had in some figures on India. We've got their GDP figures. Those are for this the full year that's just passed. That was at 6.5%, and also the first quarter figures, which are at 5.3%. Now, those sound like good numbers, but actually they're slower than have been expected. So that's going to feed through in the markets as well. And as I said, US, we can just take a very quick look. Those markets were all down yesterday as well.
Excellent. Okay, well, Bankia is the latest bank to need a government bailout, yet the Spanish government could struggle to find the billions of euros needed. Proposals from the European Commission aim to find a way to make banks less dependent on their national governments.
Considering setting up a central banking authority with enough power and money to deal with struggling banks. The Commission is thinking of using the European Stability Mechanism, operational in July, to lend money directly to banks. Brussels wants to sever the link between sovereign and bank credit lines and pull governments and financial establishments out of the spiral of debt. The idea has emerged as Spain is struggling to cope with its bank's difficulties. In recent weeks, the country's fourth largest bank, Bankia, turned again to the government for more money, some 19 billion euros. The Commission believes direct help from the ESM would restore market confidence. But all this would only work if the industry sets up a proper banking union under EU supervision.
We intend to look at the further steps we need to take towards a full economic union to complete our monetary union. The Commission will advocate an ambitious approach. The building blocks could include, among others, a banking union with integrated financial supervision and single deposit guarantee scheme.
Many fear Spain or Greece might not be able to protect clients' savings in the event of a meltdown. This deposit insurance fund would thus protect savers and governments from costly bank failures. Also, banks in Europe might have to contribute 1% of all deposits every year to create a bailout fund placed under EU supervision. For Brussels, the aim is to get the whole industry to support failing banks.
That's the latest in Spain. France, they've received a rap on the knuckles yesterday as well from the Commission.
Yes, so the Commission there, we saw Jose Manuel Barroso. They were also giving their report on all 27 member states, actually, and how they're doing on their budget deficits, amongst other things. They said about France that they needed to take swift action, they said, to get their budget deficit down to this 3% target that they're supposed to get next year. So piling pressure on François Hollande, who's made a lot of spending promises, of course, to get that done. Let's hear what the Commissioner for Monetary Affairs had to say.
It is therefore important that France will take effective action in order to meet its fiscal targets, and its fiscal target next year is to bring the fiscal deficit below 3%.
For some of the day's other business news, and official figures for April showed unemployment in France rose for the 12th month in a row. The jobless rate was up by around 0.1%. That took the number of unemployed to just over 2.8 million people.
Spanish telecoms giant Telefónica plans to sell its German division. The company is trying to cut its debt pile. Analysts believe the German unit could be worth €9 billion. Company also offloading some assets in Latin America. Last November, Telefónica announced its first quarterly loss in 9 years.
And staying in Spain, troubled Bankia could be the subject of an inquiry. The government is under pressure to investigate the collapse of the country's fourth largest bank. On Wednesday, Spain's finance minister said severance payments of 20 million euros to two ousted executives were unacceptable.
Now, have you ever been on holiday to Greece? If you have, the chances are you've probably tried a glass of ouzo. The traditional drink is as much part of Greek life as sunshine and olives. But now the financial crisis is taking its toll on producers and consumers alike.
It's a cocktail hour ritual, a setting sun, good conversation and an ice-cold glass of ouzo. Tavernas here in Lesbos have served countless measures of ouzo to generations of Greeks. But now the country's traditional aperitif has been hit by the economic crisis. People are cutting down on what used to be a daily ritual. Consumption's dipped by 30%.
People would come here with €1 or €2 and drink ouzo. Now, they don't even have that much to spend on ouzo.
For distillers of the aniseed-based alcohol, times are tough. The Plomari firm has cut working hours for employees to avoid job cuts, and despite boosting exports, the domestic slump means they're fighting to survive.
The situation is difficult. There's no liquidity from the banks. The Greek government has owed us a huge amount of money for years from the VAT on our exports. But we can't increase the price of our product at a time when life is so hard for our customers.
Farmers of aniseed are next in line to be hit by the drop in demand. They're counting on export revenues in the hope that foreigners will acquire a taste for the quintessentially Greek spirit. That's becoming an increasingly occasional treat for the Greeks.
Good stuff, ouzo. Burns your heart, doesn't it? Now, we're just going to show you some live images, actually, we've just been getting coming in from Ireland. This is as the referendum gets underway there. Of course, Irish voters trying to decide whether or not to sign up to the European Union Fiscal Treaty. It's an important one, isn't it, Matthew?
Very important one, this. Now, this isn't something that actually could derail the whole fiscal treaty, but of course it's going to be a very important signal. This is the only country that's voting on it. Ireland traditionally been very supportive of the EU. They've, in a few times in the past, said no to things, but and of course they've been at the centre of lots of this whole bailout discussion. So that result, when it comes through, which should be tomorrow, will be very keenly watched.
Not too many voters turning out to vote at the moment. Perhaps they're getting ready.
It's a bit early in the
doors to
morning
open,
in Ireland,
but,
isn't
yeah,
it?
perhaps I suspect it might be opening in a couple of minutes' time. But anyway, live pictures there from Ireland. Now, the recession doesn't seem to have hit the pay packet for footballers, though, does it?
No, it doesn't. Now, the accountancy firm Deloitte has done its annual tot-up of the wage bill for English Premier League clubs, and they found that the proportion of their income that they're spending on their wage bill has hit a new high. They're actually paying 70% of their income on salaries. Now, we can take a look, actually, at which clubs have got the highest bills. Wow. And Chelsea's there at the top with almost 250 million euros that it's paying, and the others, I suppose, not that surprising. Who's at the top
Amazing
of the table
there?
Aren't they? Those wage figures were up by 14% in the most recent season, 2010 to 2011, which that includes. So that's just in a year they've gone up at a time when other people are taking pay cuts. It seems like but the demand is there because the revenues are also increasing for these clubs, and they're managing to sell, although they're very expensive, they're managing to sell over 90% of their seats at these Premier League matches. So pretty healthy, but that's getting very high, and lots of them are struggling with a lot of debt to try and cope with all of that.
Exactly. Do you think it's too late for us?
I think so. I think we might have missed our moment there, sadly.
All right, Matthew, thank you very much. Matthew with the business. He'll be back sort of an hour and 10 minutes time here on France 24. The very latest news coming up, latest on Romeo Longrider's course. Do stay with us. For that, Becky Barry has it after the break.